Imagine waking up one morning and seeing a notification on your phone. You made money while you were sleeping. No boss, no extra work, no overtime, just money quietly growing in the background. Sounds fake, right? Like something only rich people or financial experts can do. But what if I told you that ordinary people, students, drivers, shop owners, even people with very small income, are already doing this every single day through something called the stock market? And here's the crazy part. The stock market is not complicated. It's not only for economists. It's not gambling, and you don't need to be rich to start. What you need is understanding. Because the reason most beginners lose money is not because the market is dangerous. It's because they never learned how it really works. So in the next few minutes, I'm going to break down the stock market in the simplest way you've ever heard. No big words, no confusing charts, just clear examples, real stories, and step-by-step thinking. By the end of this video, you will understand exactly what the stock market is, how people make money from it, and how a complete beginner can start safely. Let's start with a simple story. Imagine your friend opens a small coffee shop. The shop is doing well, but he needs money to open a second branch. Instead of going to the bank, he comes to you and says, "Give me $1,000, and I'll give you 10% ownership of my business." You agree. Now, you don't work in the shop. You don't make coffee. But every month, if the business makes profit, you get 10% of that profit. And if the business grows bigger and becomes famous, your 10% ownership becomes more valuable. That is the stock market. A stock is simply a small piece of ownership in a company. When you buy a stock, you are not gambling. You are becoming a small owner of a real company. Companies like Apple, Tesla, Coca-Cola, Amazon. Real businesses that sell real products to millions of people every day. But here's where it gets interesting. These companies don't come to your house to sell you ownership. Instead, they go to a place called the stock market. A giant marketplace where people buy and sell ownership of companies every second. Think of it like a supermarket. Instead of buying bread and milk, you buy pieces of companies. Now you might be thinking, okay, but how do people actually make money from this? There are only two ways. And once you understand these two ways, the stock market becomes very simple. The first way is called capital gain. This is when you buy a stock at a low price and sell it at a higher price. For example, you buy a share of a company for $50. After 1 year, the company grows, becomes more successful, and now that share is worth $100. You sell it. You just made $50 profit. The second way is called dividends. Some companies share part of their profit with their shareholders. So even if you don't sell the stock, the company pays you money just for owning it. Imagine owning a shop that sends you money every few months without you doing anything. That's dividends. Now here's a powerful mindset shift most beginners don't know. The stock market is not about trading. It's about owning. Most people lose money because they treat the stock market like a casino. They buy today, sell tomorrow, panic when prices drop, chase trends, follow rumors. That's not investing. That's gambling. Real investors do something very different. They buy good companies and hold them for years. Let me tell you a story. In 2004, a man bought $10,000 worth of Amazon stock. At that time, people said Amazon was risky. Online shopping was new. Many people laughed at the idea. That $10,000 today is worth over $1 million. Not because he was smart, not because he traded every day, but because he held the stock and allowed time to do the work. This is where beginners get confused. They think they need to be active. They think they must watch the market every day. But the truth is, the less you touch your investments, the more money you often make. Time is the secret weapon in the stock market. Now let's break something that scares beginners. Prices go up and down. Isn't that risky? Yes, prices move every day. But that movement is not the real risk. The real risk is buying bad companies or panicking when prices fall. Imagine you own that coffee shop we talked about. One day, fewer customers come because it's raining. Does that mean the business is dead? No, it's just a bad day. The stock market is the same. Some days are bad. Some months are bad. But over many years, good companies grow. This is why long-term investors don't panic when prices fall. In fact, they get excited. Because falling prices mean they can buy more ownership at a discount. Let's make it even simpler. If you love a shoe and the price drops from $100 to $50, you get happy. But when a good stock drops from $100 to $50, beginners panic. That's backwards thinking. Smart investors love discounts. Now you might be wondering, how do I know which companies are good? Here's a beginner rule that works better than any complicated strategy. Invest in companies you understand and use. Do you use Coca-Cola, Apple, Google, Microsoft? These companies are part of everyday life. They have millions of customers. They are not disappearing tomorrow. You don't need to analyze complex reports. Start with what you see in real life. Another powerful tool for beginners is something called index funds. An index fund is like buying the whole market at once. Instead of choosing one company, you buy small pieces of hundreds of companies together. This reduces risk because even if one company fails, the others still grow. This is why many experts say, Beginners should start with index funds before picking individual stocks. Now here's something very important. You don't need a lot of money to start. Many people think the stock market is for rich people, but today you can start with very small amounts, even $50 or $100. Some platforms even allow you to buy fractions of a share. The goal is not how much you start with. The goal is starting early and being consistent. Because of something called compound growth. Compound growth is when your money makes money, and then that money also makes money. Imagine investing $100 every month for 10 years. Not a big amount, but with compound growth, that small habit can grow into something very big. This is how normal people build wealth quietly. Not through luck, not through trading, but through patience and consistency. Now let's talk about the biggest mistakes beginners make. Mistake number 1, following hype. You hear on social media, this stock will explode. You buy without understanding. Most of the time, you buy when it's already too late. Mistake number 2, selling when scared. The market drops. News channels panic. You panic. You sell at a loss. Then the market recovers and you regret. Mistake number 3, trying to get rich fast. The stock market is not a get-rich-quick place. It is a get-rich-slow place. And that's exactly why it works. Because very few people have the patience to do slow. Here's a mindset that will change everything for you. Think like a business owner, not a trader. When you buy a stock, ask yourself, would I be happy owning this business for 10 years? If the answer is yes, you're investing correctly. Now let's make this practical. How does a beginner actually start? Step 1, open a brokerage account. This is like opening a bank account, but for investing. Step 2, deposit a small amount you can afford to leave untouched. Step 3, start with an index fund or a well-known stable company. Step 4, add money regularly, every month. Step 5, do nothing. Let time work. That's it. No daily stress. No constant checking. Just patience. And remember, the goal is not to predict the market. The goal is to stay in the market. Because history shows one thing very clearly, over long periods. The stock market goes up. There will be crashes. There will be bad years. But the overall direction is growth. People who panic leave. People who stay become wealthy. This is why the stock market transfers money from the impatient to the patient. Now imagine this. 10 years from now, you look back and realize that every small investment you made quietly grew into something meaningful. Something that gives you freedom. Something that gives you options. That journey starts with understanding. And now you understand what most beginners never do. The stock market is not scary. It's a tool. A powerful one. But only if you use it correctly. So don't wait until you have a lot of money. Don't wait until you feel ready. Start small. Start simple. Start today. Because the best time to invest was years ago. The second best time is now. If this video helped you finally understand the stock market in a simple way, make sure you like the video and subscribe.